In today's video, I am going to be talking about 3 dividend stocks that I want to buy and I'm going to be buying in November. Let's get down and let's check these out. The first stock being Enbridge. Enbridge looks like they are set up real well into the future, especially with them starting to really invest in green technology, for example, solar panel farms, wind farms, and the likes of that. Also for electrical grids as well, they're going to be really laying a lot of cable. It looks very promising. I've been really talking about this a lot lately, and it just seems like I just keep on looking to buy more. Currently pays 6.3% of a dividend. It pays it quarterly, and of course if you get it before the 3rd of November, which that is today, and I'll be posting this video afterwards, then of course you will be able to get the dividend in December. Otherwise you're going to have to wait for the dividend for a bit. From there, we're looking to look at the volume, and the volume is very healthy. It's at 7 million shares traded on average every single day. It's well over 7 million shares today. Looks very, very promising. The PE ratio versus something like a TransCanada is actually a lot better. So it's a cheaper company than TransCanada, because right now TransCanada's PE ratio is 32, while Enbridge is 17, and they are in very similar markets, even though Enbridge is looking more into the future when it comes to green tech. Their chart, however, is kind of, interesting, because as we can see, they did hit what seems to be a pretty solid double bottom. But at the same time, we really want to look at what was happening before the pandemic. And before the pandemic hit, we can see that it was actually on an uptrend. As soon as this hit, oil prices sank, and that is majority of their business. And when it comes to oil prices, if that drops, Enbridge should also drop. Then if oil prices rise, like they have been, Enbridge should also be going up. But we have to look at more than just oil when it comes to Enbridge. There's going to be green tech that they are investing in. They're already investing in it. I've made videos about that. So because of that, they are looking very good into the future. They also pay a very high dividend, and they also regularly increase their dividend as well. Kind of like IBM, they keep on increasing their dividend, yet their stock price tends to not really go anywhere. However, if you look at it, 83.5 cents per share today, and then if you look back even just to 2014, you're looking at massive growth, well over double, and that's not even 10 years. If we look at their earnings and their financials, we can see, of course, 2020 wasn't exactly a great year. However, they were increasing revenue and earnings before 2020. 2020 was hard for everybody, so I'll kind of forgive them for that. From there, they have had 2 bad quarters. However, they've also followed up with 2 fantastic quarters. So it's going to be very interesting to see their quarter on November 5th and see and gauge if they are continuing to be a good company to invest in. Next is TD. TD is literally my largest holding that I've got outside of ETFs. And from there, they do have a 3.5% dividend, which doesn't seem like it's very massive, but we have to remember that they were not allowed to increase their dividends because of the pandemic. All the Canadian banks have been told not to be able to increase their dividends, so they haven't been. And we can see that they have healthy volume as well, so it should be very easy to get in and out of. They're one of the cheapest Canadian banks right now as well. We can see before the pandemic, they were pretty much trading sideways like most Canadian banks. I think National Bank was one of the few that was actually increasing during that time. However, they have recently broke past their high back in July, I think that is, or August of 2018, and they have since broken past their high back earlier this year as well with a double bottom. So of course this looks very, very healthy. It's going to be very interesting what they raise their dividend to be, because we all know that they've been making a killing when it comes throughout the pandemic. But also, check this out. This is how I really like to gauge my companies. Usually they are raising their dividends by 5 to 8 cents. And let's call it 5 cents on average, which is an understatement. And from there, we would see that this would be 1, 2, 3, 4 quarters there. This will be another 4 quarters here. So technically, they could raise their dividend from 79 cents in theory, in my own personal theory, to potentially around 90 cents or more sometime next year. So that would be a very healthy dividend raise, and it could be even higher. Who's to say? We'll just have to wait and see. They've had pretty good quarters over the last 4, and something that we really need to look at, and why I'm saying they are going to be raising their dividend a lot, is what has happened in 2020. 2020, they had massive revenue cuts because of COVID. From there, when it came to their earnings, look at this. They actually had higher earnings than they did in 2019 with lesser revenue. And because they had lesser revenue and higher earnings, that to me tells me that their dividends are going to be doing extremely well, and that, of course, they have now learned how to make more money with less money coming in, which then ultimately means that they make more earnings into the future. Next is Suncor Energy. Oil is continuing to rise. They pay a 5% dividend, which is huge. 10 million or 9 million shares traded on average every single day. 20 PE ratio is pretty strong when it comes to the oil stocks, and they haven't fully recovered since oil going negative. Oil went negative there, and they haven't exactly done extremely well. You would have expected them to get back up to this point, considering how well oil has been doing. So we're going to be seeing that revenue trickle in over the next couple of months. And when that happens, I would be not surprised if they started really testing that $40 mark once again. And they're currently being traded at $31. Their ticker symbol is SU, if you didn't know that yet. They did, however, lower their dividend when oil went negative, which is no real big surprise, to be honest with you. They cut it basically in half, a little bit more actually. But if you look at their history of dividend raises, they were doing quite well, and they may actually increase their dividend again because oil's been doing fantastic. When it comes to their quarterly earnings and financials, we can see that they did have one bad quarter in the past. They've had one meet, and then of course 2 beats, which is still really good. It's going to be very interesting to see what happens again in the future months. However, what we do see too is in 2020, we did see, of course, that negative earnings. Of course, oil went negative, lesser revenue. So if they can continue to cut where they need to cut so that they can make more earnings with lesser revenue, like every business is currently trying to do right now, then they seem to be pretty solid. The only thing is 2019 seemed to be a pretty dud year. It was pretty even with the year before. So that is something that needs to be addressed. So that's my overall thoughts. Suncor, I would kind of wait to see what happens over the next couple of weeks with oil. When it comes to Enbridge, I would be buying it before the dividend. Obviously, you're going to be watching this video after that date, so I'm sorry. But either way, when it comes to TD, any of the Canadian banks are going to be really solid. TD just seems to be the cheapest when it comes to PE right now, and they're making a killing. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.